increase in volatility back up to the bottom of the node and through the low of day, sniping all the stops at the bottom. And now it's like all of those times that were above that low were unnecessary. Now it's provided a price that's better than the one from before and is still poised to break red yellow lines. A lot of people think that just because their experience is finished with their short-term trade that the entire movement is over, because it's a very self-centered kind of like mentality where they don't think about the big picture and what's going on in the situation. All they think about is themselves and what happens to themselves. They don't think about, are they gonna, like, are they positioned to make money, like a ton of money on it going to the target? That's the question. You know, 9 times out of 10 they would rather end up being defeated than persist. At the end of the day, it's not easy because it takes all of the time that it does, and it creates the one right spot at any given point. Whereas, we've only got a limited amount of time in the day to do that. And I find it very likely that this trend does break during the day and that we get to the 61 ultimately during the day. That's what I'm looking for. And the 61 will change slightly with the low that we have there, but it's not really a big difference. And I still wanted to get to that same 61 anyways. Despite the fact that the 61's changed, it doesn't really change much. So again, everything is a spike away from the blue bar. There's not been a movement today that's lasted outside of that blue bar that hasn't come back as quickly as it's left. Every single movement we've ever done away from it's always come back to it. And here we are again, completing another one of those movements. Yeah, I would suspect that the institutions would be using phrases like, how many do we have left? You know, kind of situation here. Like, where are they positioned at? Do we need to come and grab them? Like, these sort of stop killer like movements that are just specifically down to like the low just to grab stops. They're like collection points. Look at it go, eh? See that collection point? Zip. Back up. Just wanted to grab the stops. And we're gone. It's like a millisecond for people to make a decision. It's very unlikely that a lot of those people are trying to buy within those times, but they are very likely to be liquidated because they take a position in the area where it's very, very slow. And then when it moves really fast, they're not taking positions, they're busy getting stopped out. And we can see that the node's barely getting any kind of growth to it whatsoever as the public is very, distant. It just doesn't seem like they're so super attracted to it like they used to be. It's not like we're going to grow a node like what was at the triangle. It's almost as though we've moved away from the triangle as much as we did to get down to it. There's still that same limited amount of space with the red-yellow line. Now it's almost the case that when the red-yellow line breaks to get to the other one, it'll be a usage of the blue bar. To the other side of the blue bar specifically. This is what it takes from all-time high to break a trend. Many times over we'll experience this because it's not the beginning of the institution's plan. It's designed to be more difficult, to be more like a needle in a haystack reversal like I mentioned before. And it could be a very short-term orientated reversal. And that's what's funny is if there's no short-term trade, it's very difficult to get in on the move. If you know that there's a need to get back to a blue line or get back to the red-yellow line, like, I mean, I couldn't tell you how many times I said that we would get back to the red-yellow line. Getting back to the red-yellow line itself is, oftentimes it's at least 20 points or more. But the average counter-trend move in here is about 30 points, I'd say. So what we're looking for is to be able to do more than a 30-point move pretty soon, to be honest. Like from here, we should be able to do a proper break of whatever our counter trend move is, which is really clearly a 30-point move. Pretty much right here. Like that distance right there. It's been pretty appropriate all the way down. Given that that distance. And that distance is 35 points. 34 points. We're looking at being able to break that just to get back to the blue bar and to get back to the red-yellow line. It's going to take more of a counter trend move to get back up to it. But if we get back into the blue line, then there's no excuses that we're doing something we've never done before since we left that triangle. And I'm looking for that change to happen right about here. For the break of the red-yellow line to be more effective now than it ever has been in the past, and that we're more likely to try and hold a retest rather than coming back beneath it. And it's the first time that we're basically going to be threatening to break the trend outside of the blue bar. So we're like going to break the red yellow line without it being inside of the blue bar. Sometimes we like to break the trend back up to the blue bar, but I mean that's not a very big distance here. This has all been part of the, gruesome reversal process that would typically be relatively easy given, it was from a normal place, like an actual low. But because it's for everyone that doesn't have a long trade, it's for everyone that isn't holding to begin from this new area, and the market treats them like this. And it's not because they're benefiting greatly off of the dump. Like this dump is nothing in comparison to the run. But it's for the people to make it seem like it's fair, to make it seem like it's even, to make it seem like the bears still have a chance. So we give them a day where the whole day across their screen is the bears winning, but it's just a small amount in the big picture. But to somebody that's staring at the chart all day, they feel like the long traders are really getting, you know, the shit kicked out of them. When at the end of the day, this is the long traders' domain. Like at the end of the day, they literally brought us up here, and they're in control. Like this is literally not affecting much of that like powerful position that brought us up to here. With all-time highs still being on the screen, it's hard to say that it is low. And bullish patterns from such a high point, I mean, naturally they're not from the beginning of an institutional plan, so this is the kind of treatment that we can expect them to have. And you want to know what's funny? Is this kind of treatment can happen for the next 5,500 points. Literally. It's not going to be anywhere near where the institutions began. And that's power for them, weakness for the person that day trades every day and doesn't stick to the institution's plan. And the funny part is, like, how many people do you think you're going to avoid if you start long-term plans with day trading environments? It takes people to be versatile, and from what I can see, all people are taught to be either or, and they get categorized and placed into their category of either long-term trader or short-term trader. There's a lot of that going on, like either stock trader or options trader. It's big, this or that. And I see the institutions obviously do everything that all of the people do. And the people think they have the audacity just to specialize in some fucking side gig for a little bit. I'm like, it just doesn't make sense. It's you have to understand the whole picture. Sometimes those big long-term moves that you want to be in on start with very short-term environments. Sometimes the short-term moves are impacted by long-term indications. People don't get that. They refuse to adapt and comprehend the opposing information. But when I see this day, I see it's literally just for the people. In the grand scheme of things, I find it incredibly unlikely that any of the failures that are had on today are going to be visible in 2 weeks, 3 weeks. I'd be like, so where did it happen again? And people won't even be able to tell me because it will be rendered insignificant. So I find that intriguing, that it's very likely to be rendered insignificant, and that the experiences that people are having are literally just to chop them out of the top. Like the institutions aren't going to be starting from here. The people start every day regardless. Where are we in the plan? Do we think it's over? Something tells me that the institutions are getting by on a short-term hedge, but are not incredibly interested in unloading their entire exposure, and that further continuation is on the table. And if they're really smart about it, the next thing to get hit is not going to be the assets but the dollar. And like I mentioned before, so they might feel more safe holding assets while the dollar is down than holding the dollar, because those companies are likely going to be more valuable, to hold. They're likely going to be a better tradable currency, amongst the rest of the world. Like people even though the dollar might not be as valued, it's not like Apple's, not going to be the same company, or Microsoft, and so on and so forth. And it's not like they're not capable of thriving in good economic conditions in the good world economy and so on. Deja vu with the 3 drives pattern there. A little 61 along the way. The objective remains the same of getting through the red yellow lines, despite the fact that we buy small increments of time with them. All of that progress with the trend is likely going to be broken and taken back immediately as soon as the trend is broken. Think of the whole day as a big fat 3 drives pattern. I'm very bullish on it, but doesn't make it easy. When we look back at this movement, will we see it as something significant? I don't think so. I think the movement that follows is actually going to be more significant than any dump on the screen. Of course, when a 3 drives pattern plays out, just getting back to the middle would be 1, would be 2, would be 3. 1 is the middle. We have 1, 2, and 3 even in this smaller little area here. And that is giving us a prime example of how this one is going to play out. They make it more difficult than what most people can handle. And that's the thing is they're not trying to set up an area where they have enough liquidity to buy a long trade themselves. They're piecing out their hedges and moving it up on the path of least resistance with positions they've already acquired from way longer than this fucking chop ago. This chop is for all the ordinary folks. If there's one place that they know people are, they know they're in here. And they're dealing with them. At the end of the day, does the plan stop on the long term? I don't believe it does. Not for this. Not for this. So yeah, it continues like it always ever has. The all-time high being like any other one in the past. Something to get above. And it's like, do you feel like, yeah, sure, when it was high before, we were still high, maxed out at the top, like through the roof. And I mean, like now, this all-time high is just the same as any one of the other ones. Just because it's a little bit higher doesn't make a fucking difference. The next all-time high has always been a little bit higher, you know? That's how we're gonna do it. Just keep making new ones. With these days where we show them that, hey, you're gonna get this, the pullbacks, you know, they're super significant, and it's just for the people. Just for the people to experience throughout the day. That's the way I see it. And the institutions aren't panicking about it one bit whatsoever. But people think that it's important because it drapes across their screen the entire day. You know? And they think that there's something important about it, but you know, it's like looking back at this movement right here. It's like looking back at this movement right here. It's like looking back at this movement right here. It's like looking back at this thing right here. You know? Like, do you really see this move stand out? Like, do you see this movement in here stand out a lot? See this movement right here stand out a lot? What about, like, this movement right here? Like, was it standing out a lot? Like that one there, maybe? What about this one? That was super significant, right? That definitely held us back. And this is different. Well, it's not for the institutions that are doing it the right way. It's for a bunch of people that are doing it the wrong way, essentially. They're not following the institutional plan. They're not starting where they do. They're starting at a point where you can say that they're not anywhere near. And it's difficult. Why? Who's it difficult for? And is it difficult because it benefits the bears so much? I don't think so. At the end of the day, this kind of movement has been increasingly common in this range. Like if we have a green zone and red zone, and I'm like, okay, if we go up like this and come down like that, you know, and come back up like this, like how big do you think those moves are? Like, did what we do right now, is what we've done right now different? Like, is it so far off what we've been doing that it's so abnormal and new and shocking? Are we surprised by it? Do we find it super surprising? We get mentally stimulated when we're surprised. We've been trained since Christmas at birth and everything. Just to be excited to get stuff we don't deserve. Well, that's not going to help you in this business. It really isn't. You know, it's like we have to know what we're going for. Hone it. Want it. And understand it's doing what I'm saying. Like 1, 2, and 3. 141 was the same reason that we made the last low. When we came up off that last low, it was a 141 to 61. Like, we all knew that. The 141 was the major reversal. And we came shooting back to that 61. So, like, that's like a beautiful movement. 38 more points to go. And when we break all red yellow lines, we could shoot through to get to high of day to all-time high. Like, that's what every trade should be fighting for. If you give the trades up along the way, then you don't understand the value of all-time high. We must ensure the trade plays out at least to the target. You profit at the target. Where's the target? Like, sure, short-term profits can be taken, but only enough to make sure that it's safe to continue holding the rest. If you give up the rest, you're really losing a lot of money. Like, a lot of money. And it's just so stupid. We can't do that. We have to start developing, like, I hate that. I hate that about myself when I give it up. If you don't feel like anything's wrong, then it's okay to do it. Look at this beautiful movement. Institutional trend break. Everything from 1, 2, and 3. Blasting up to hit the target. Yeah. And we want to see it break through, to be honest. Everything. You know, enough profit can be secured at this point at the first target, at this blue dash line. 1, 2, and 3 comes back to 1. That we can secure enough profit so that any retracement that it makes, we can give enough flexibility on our stop because we secure enough profit to make sure that the rest of the trade can be managed and nurtured safely beyond the highs and to all-time high, ideally. Now, the biggest threat that there is that it has to do it on a W. But in the event that we do it on a W, it doesn't change the fact that we end up going to all-time high. Like, I believe wholeheartedly that we end up doubling the entire move and more to get through all-time high. You know, even if it makes it so that it is so difficult that it has to be from an entirely new low, it does not change my ultimate destination of being all-time high. So I know that if you have a position, you've taken profit on it, and you're able to hold the rest of it, you're paid what you've taken profit on, and you're satisfied with that. If the rest goes to shit, you know that you're paid what you've taken off. And we can all be satisfied with an ample amount of time right now to take off a satisfactory amount that the rest, if a stop is placed at break even, that you're absolutely fine. Now you can handle every single retracement that there is. And if you took, well, you know, if you have a position that you can hedge, you can look into hedging as well if that's an option. Like looking to hedge from the high of the node down to the low of the node would be the next thing. You know, looking to hedge the first initial response of the POC depending on how we attack it. You know, ultimately knowing that we want to break through to get to that 61. Ultimately knowing that that's not actually the 61 anymore, but I want to see it get through all 61s. It's true that that is the 61 area. It's the 61 for the giant movement. It begins there. That was the original one. I believe that one is the one that's set to break. We have to get through this node to even interact with that 61. But yeah, we just hit the gold bar. At the end of the day, it's on a 3 drives pattern, so we could come back and attack the chop. We got to watch out for the imbalance to make increased volatility, which could honestly overlap much of the progress if you're not careful. At the end of the day, the trend didn't break. I decolored the trend to make sure that it was, you know, not a scary one or not a tempting one. We could easily go back and touch it before the imbalance, so much of the value that has been provided to the gold bar could also be tarnished on a journey back to the first of 3 highs. Couldn't say any better, and if I had a time machine, it would be a waste of my time to change anything about what I have said. At the end of the day, it's a pretty boring experience, but if you do follow the rules, it can be quite lucrative and change your entire life based off of just understanding the need to get to these levels, like the number one need. Like I've had these arrows drawn in here. We knew that the all-time high was ultimately going to be the goal, that every single target that's on the chart has to break in order to achieve the goal. And to be in for that, and to say, well, how much do you think it's going to give you beyond all-time high? How much do you think you're going to get this time? Do you think it's going to be a little fart in the wind like last time? Like, you know how we barely got above all-time high? Something tells me the next time might be a little bit more juicy. Because the last time sure as hell wasn't. Last time they weren't advancing the fund. This time, though, after all this difficulty, you could say it wasn't that difficult this time. You could say it wasn't that difficult this time. This time, you could say it was generally the easiest time. Look, 261 down there, like that. And look, this one, 261 down there, like that. Wow. Today, we had not quite the same setup. You can't really do that. Maybe here, 261. Low of day. Yeah, here I could put on like this. See? The end of the day, this entire movement, despite the fact that there was a 3 drives pattern, despite the fact that we knew it was likely to break up, like I didn't need the 261 to tell me it was going to reverse. At the end of the day, that's the least powerful indication. If I make a video on this, like the knowledge of being able to see that it was going to make more than the average counter trend move, that we were going to breach more into the movement, into the range, that we were going to play out back to the first of the 3 drives, like this works hand in hand with that. When we think about going from 3 back to 1, that's like going from here back to here. Now we've almost made the full connection back to there. Now what's funny is we could chop the 61, we could chop the close, we could chop the red yellow line, but that doesn't necessarily change that the destination is to be beyond the all-time high, and by a magnitude that I think is going to be greater than the last time. As when we end a consolidation and we've made our spikes and wicks out of the tops and bottoms, what do we typically do with the consolidations if not double? So is it not true that we could take everything that we've done within the consolidation from an extreme and double it out of the other extreme? But here we are basically using 1, 2, and 3 on the short term. We know that that first one is almost hit now, and essentially the third drive is led back to the first. In doing this, we could have 1 be here. This whole thing could be 2. We could easily make a second drive out of this, no? And make a third one for 3. So what we're doing now, even though we're showing 1, 2, and 3 on the short term, even though it's 61, if we go, maybe, I don't know about a 61 again. That might be a little bit deep. So I'm not a huge fan. Even though that would have a good risk reward for being able to go up. What it reminds me of is this triangle right here, but flipped upside down like that, like an expanding wedge trying to form after the contracting one, which reminds me much of what kind of movements we were doing in the morning when it came to a contracting triangle and an expanding one. You know, that's not uncommon. Yeah, you know, I just look back at that and I can even see over here the idea of making an expanding and then contracting triangle out of that kind of motion. Like, it could be argued that there's a triangle forming up top there. So I think about that, and I think about the relationships we've had with many of the triangles lately and where we've come from and what we're doing right now and how we have that same relevance from back-to-back triangles. And what the beauty of doing that is that we go from here to here and then we're done. And I don't really care if that happens first or if that happens first, but once they're both on the page and they've both formed, then it all can be done. And this whole area that nobody really wants to be a part of could be done too. And I'm like, yeah, okay. They can use the imbalance to mask their trade, because when people look back and say, why did it move? What was the news on that one? They will say it was the imbalance. And then they're like, oh, okay then, I guess I shouldn't look into it. Or maybe they'll make some news event for the movement. They're like, what news event could we tie in with the next move that we have so that when people wonder about the move, they think it's the news? What do we think? What news should we create? So we've managed to come all the way back down to that secondary low again, like that 61. The imbalance, you know, like we've talked about, could be from a point that's drawn back all the way. This is a heavy, heavy, heavy move. We've created need to come back up to these lows here. And that's something of an interest. Easy 60-point movement back up to those green lines. You just have to be quick enough for it.
My concern was that it was going to go to the 580 area today and do like a double bottom and go back up. And I'm noticing it's
almost at a double bottom. Yeah.
Yeah, at an almost double bottom. And then
it would have to go
at the end of the day
a bit lower to get to the bottom of the range. Yeah, it doesn't change anything about the break of the red yellow line above as well. So many people, just like the movement over here, will assume that this is something that affects the institution's plan when their little bubble is just around here, and the institutions did not start from over here. They didn't 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 start from over here. And they didn't start from over here. And I'm like, you want me to keep going? I'm like, literally, I could keep going. But at the end of the day, this is the little sphere that people live in. And when it hurts them, it does not hurt the bottom line of the institutions. At the end of the day, their assets will benefit from going through this high, whether it's with these people or not. That is the number one thing. At the end of the day, it'll be a short-term trade to get us there, and pretty much anybody that's holding is not affected by this movement, but if anyone is day trading, they have to begin from a new point, which many people will not continue to try to do in the overnight session. So will this get rid of most people for the break of this trend? Okay, let's look back tomorrow. Does this movement just happen to get rid of you for the break of the red-yellow line? That's what I'm going to leave on this chart. Does this movement just happen to get rid of you for the break of the red-yellow line? That's what I'm concerned with. Because if it gets rid of you for the red-yellow line, it means you've started from a place that's nowhere near the institutions, first of all. And second of all, should it not be like this? Does it change the ultimate destination? No. Just because it's difficult for these people? Are you kidding me? Not at all. Like a fourth drive. Which is giving me kind of like deja vu to earlier in the day when we talked about a fourth drive somewhere else. Can't remember where though. On the short term.
What do you think will happen in Asia? What's your guess?
In the overnight session, I think that it's very likely to progress towards being at the area where everyone was just at. But they're not going to be in anymore. Like all of these people that were just in, ready, they've been sucked out and they're going to be gone. They're going to be losers. And that's the irony. I'm confident that the break of the red-yellow line is the number one objective. Yeah, there's some companies releasing for sure at the close, so you know, there's going to be some rebalancing done on these earnings reports from all-time high here. The imbalance is coming in 2 minutes. Much of this dump could be bought back out just for it to be literally rendered insignificant by the end of it. The number one trend is the break of the red-yellow line. But you know what's funny is that didn't change on this low, and that didn't change on this low, and it doesn't change on this low. So I find that very interesting. And like I mentioned, like I did say along the way that we could make an entirely new low and it's still fine. It's very, very much a matter of if you capture the extremes. Like we have an extreme offered here where if captured, that any pullback that happens that is not entirely to the extreme should be essentially accounted for and allowed to happen. Catching the pullbacks is something that's never worked today. You know, it's just never worked. Like, I mean, there's been times where it's went up for a bit, but it's been nothing like the extremes. The real value is at the extremes, not at the, and the imbalance here could be manipulated right back up to the green dash lines. We have to watch out for the 2 seconds candle to push up. Watch out. Told you. At the end of the day, the institutions they think the same way. They're literally humans that program the algorithms that everyone thinks control the market. The fucking humans that tell the algorithms what to do, they don't stop working. They don't stop. They're there now, looking at this candle right now. They are, literally. So, I find that very interesting. And everyone has the ability to do as they do, to spend the time that they do, to do the things that they do, to care about the things that they care about. And everyone has the ability to see the work that they've done at the end of the day. And here, we can see that this blue bar from the beginning of the day has been incredibly valuable in this entire area. That when we go from green to red, it's like using that range. And also, whenever we make a spike out of one side, it's destined to happen out of the other. Like, literally. We've seen that. And it doesn't necessarily make it an easy day just to know that, but it is something that has been on there since the beginning of the day, and we've spent the whole day beginning and ending at that blue bar. If there's one thing that shouldn't cost anyone money, it is to return back to the blue bar, as it's the most commonly returned to mean. As we've determined when we were grinding the red zone above, that returning back to the mean is something that is the theme of the day, that we're not in a trendy sort of environment. Even though it is on an angle, the downtrend is actually more of a consolidation style movement than an actual ground covering sort of movement. It's not like we're covering severe ground to the downside. It might look like that if you're zoomed in like I am right there, but if I zoom out, it won't look like we're fucking covering ground at all. So, are we really let's look at the daily real quick. We'll do top-down analysis. Are we covering some ground? Not even at the fucking B point yet. Literally not even at the B point. Covering ground. We knew that the next couple days could be overlapped, and they still can be. This entire area up here can feel like a chop. And that's okay. That's something I said yesterday. If I made a video on yesterday, you will see that in there. Another 61% retracement prior to the close. They don't think people are going to be trying it, so it's probably more likely to work. And it just goes to show, if it does, that more people are not putting themselves up to be, I don't think they're being victimized for putting the work in at the end of the day here. I don't think they're going to be victimized. So, let's see. 15 points off of it already is enough to amply put stop and profit to protect any trades that have been taken off of the 61, but there's logic in it working. At the end of the day, it doesn't have to work off of one test, it doesn't have to work off of two tests, but working nonetheless to get to the red, yellow line and beyond. Yeah, I want it to look like something like a phase A to get to the B point, to be fair. Could it be the last and most violent movement back to the blue line from above that we'll have? Like I said, if we kept the relationship with the blue line in the overnight session, you want to know how far down we will be? Like, we have to consistently drop 0.12% every hour. If we did that overnight, it's going to be hundreds and hundreds of points just to maintain a relationship with that. And it's possible, but yet unlikely. I find that the relationship has been constant, but less likely to retain for a long-term period of time. And that what's easier to get back to in the long-term period of time is actually the red, yellow line. And I've had this on here. It's giving me heavy deja vu, but we're gonna put it back on there like that anyways. So the 61 popped again, another beautiful pop off of it. Like I said, you don't have to prepare for that one just to be the pop. It could be the next one or the one after that. It doesn't have to be the first or second time, like I said. At the end of the day, it works when it gets to the red, yellow line. Everything else is like hardly working. But I'm interested in the institutions playing the game right now, not waiting for the close because it's dangerous or anything like that. I'm like, no, 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 no. They're playing the game right now. It's fucking obvious. If you need to think about it more, then you can just quit right now. I'm like, literally, this is the time that they're interested in doing it because everyone feels that need to quit so heavily. I'm like, okay, this is when they're clearly moving the market independently of many of the people. A lot of their stops at the bottom were just dormantly sitting there because they were hits, not because it's not like they're going to get in again. A lot of people won't. And nothing changes about the red yellow line. Today's a day where it reminds me of the beginning of the trend, to be honest, where things were about fighting for it tooth and nail into the close at the end of the day, because they were making it as difficult as possible to acquire the valuable position. And now even just to get to the trend is a pretty significant movement, over a couple hundred points. And it doesn't have to take a long time either. It could be done very quickly, but at the perfect time. And I think that that's the concern right now, is that perfect time. We're waiting for that perfect time. That perfect time can be at a really inconvenient time for most people. And we can tell that the increase in volatility to deal with most of the people, where most of the people end up getting liquidated at the end of the day, it means that their likelihood of being able to try and reclaim their positions are very, very low. It's very, very likely that this movement was the nail in the coffin for a lot of people, and that even though they wanted to be in for something, that their willingness to continue and, persist with what they understand will happen will be reflected in the following hours. Whether they have a position for the red yellow line or not, whether they have to end their day when everyone else does or not. And you'll find who the real professionals are in the after hours session tonight. I find it's very, very likely. Plus, we've got a lot of earnings every single day. Okay, so these are important days to the institutions that own a lot of these firms. They're in a really safe position because all these companies are at all-time high. It's very likely that if anything is wrong with the earnings, and if the people sell into them, it's not going to be so much that they can't deal with it. They're in a very strong position where a lot of their companies can go through earnings from all-time high, and it's very hard for them to be affected negatively. If they do get major sell-offs in those companies, they're likely going to buy everything out. Like, from the position that they're in, the amount that they're in, the amount that I can see that they've done to get to where we are, and the amount that they're trying to make sure that you're not in on the next part of the plan, is very clear. And it takes all of this time to this point at the end of the day to have this attitude, because it's at the point that counts. Everyone quit before, though, and they will be losers forever. There's one chance to be in for the red yellow line, and they're making it so that people from today are going to be this. Does this movement just happen to get rid of you for the break of the red yellow line? And that's going to haunt people. Don't be that person. Well, don't let them get rid of you. Like, what the fuck is that? Like, how much lower did we go than the low? Is it any lower than what we're used to on every other point? And what is the value of the red yellow line suddenly changed? Doesn't it become more valuable to have a position there? If it broke the red yellow line from there, you're only getting 250 points, right? If it breaks it from here, you're getting, 300. To get 250 points, we'd have to break it all the way over here. And that's possible. But this is exactly the time that counts. And I don't care if it's uncomfortable, if it's a time that we usually think about doing something else. It's the wrong time to do that thing. I'm like, whatever, I don't know what to tell you. But like about 20 companies are about to release earnings on this minute right now. Not a lot of them are NASDAQ companies, but it's very likely that they want to make sure that no other industry or any other index can affect what they're about to do on the NASDAQ. Even with the drawback we've had entire day today, it makes it harder for earnings that are bad to actually be more negative when people think that it's priced in within this negative experience they've been having. So I find that also part of the plan. It's very well thought of and meticulously created from what I can see. But that is the close, and at the end of the day, I find it very likely that we're going to be interested in breaking that red yellow line, and that this movement was a direct ploy on trying to get rid of people for the break of that red yellow line. Obviously, it doesn't overlap anyone that's in from a good price, like anywhere underneath a break of a trend or anything, but only the people that bought the pullbacks from all-time high. That's who we're going for. And we'll leave it at that. But yeah, hopefully you guys have a wonderful evening, and I'll catch you guys later. Peace out.
See ya.
Yeah.
Thanks.
Take it easy, guys. Peace out.